Good afternoon, everybody. Welcome to MarketStream.live and the closing bell. My name is Joseph Cusick with the Cusick Group, and we got one more trading day left in the month of June. And I have to tell you, this has been an eventful week to say the least. This closing bell, guess what? We got a real mixed market to say the least. And it really comes down to this. I mean, if you take a look at this, here's the leader and laggard board today. This is a little bit before the close when I pulled this up, but you have basically banking, energy leading the way today to the upside, and you had tech, you got staples, you have materials, industrials, telecommunications, small caps, and so forth, leading to the downside, with tech being the most notable one. And you know, this has been the battle that we've seen all week. One thing that was also notable is that you saw an early spike in implied volatility. It opened up on its lows and then boom, it just skyrocketed. It really started after you saw a big pullback in Germany. As a matter of fact, we saw the German DAX actually finish. I'm going to scroll down and bring this up. You saw the markets really start to react negatively when the German DAX started to pull back towards the close at around noon Eastern time, and it's challenging its 20-day moving average. Now, we talked about watching the DAX during the day. EWG also finished down 1.62%, but the DAX finishing down 200. There's a lot of pressure right now in that market. You saw a little bit of flow through there, especially since the euro is so strong. Now, one might ask, why did the energy markets hold up as well as they did? Probably there's two notable things. One is the weakness in the US dollar. You see that the crude contract bounced off of its lows, finished the day up basically a penny at 44.89. That's not what's notable. What's notable is that this crude contract has been able to stay right at that $44 to $45 level, which I think is the sweet spot right now. Don't see much more than about about $1.20 in range between now and the end of next week, and maybe 30 cents going into tomorrow as far as movement in the crude contract. And volume is going to be light tomorrow, so watch for the headline risk. But with that being said, there are two catalysts for crude holding it here. One is the weak dollar. The dollar has been really weak and continues to show weakness. That's been helping the commodity. The other one is unrest in the Middle East. Earlier this week, we were hearing rumblings out of Syria. We're also hearing that the Saudis and the Iranians are going at it. There could be some real volatility coming up in the crude markets, and any disruption in either production, and we did see some production cuts that are going to be coming here in the States, that's going to help wean off and start to eat into this enormous glut of inventory that we have. Also, with that being said, what's notable is the fact that, taking a look at the energy markets, the only concern that I have at this juncture with energy is the fact of the matter is if we start to get even some more poor economic data out, that could really put some pressure on the downside. Watch 44 on crude as a level to hold. Now let's start taking a look at the major market indices. Taking a look at the Dow Jones finished down 167. I mean, you're seeing one heck of a week start to transpire here. Decent range so far. I mean, you got it up, challenging those all-time highs again, and then just pulling back. I'm looking at the weekly chart, as a matter of fact. You see the highs right here. This is where we started. This is where we're at. We're coming off of the lows. If you look at it on a daily chart, the reason why I want to bring this up, this is what's notable. We've had a grind here, but we have the short-term bulls on their heels. This is something I want to watch very closely going into tomorrow. If the Dow, what's been holding up the Dow from really cracking with the break in tech, is the fact that finance has been holding up so well and energy hasn't been able to rebound. That is a positive for the Dow. Even though it finished down the day, it held up quite nicely. It is below now its 20-day moving average. 50-day moving average is next level of support. We saw similar action in the S&P 500. Not yet pulling the ripcord here, folks. Watch on the SPX, which is the S&P 500 cash index. Watch the 2409. That's 10 points away. That's the 50-day moving average here, this red line. It tested that today, but bounced off of it, finished right below, right in between the 20 and 50-day. The battle has now begun for the bulls to really show up if they're going to keep the upside. Where the bulls are losing that battle right now is in the NASDAQ. The tech-heavy index, the NASDAQ 100, finished the day below its 50-day moving average at 56.76. It's got some work to do, and the large cap names, the Apples, the Amazons, the Facebooks, the Googles, the Netflix, and so on, NVIDIAs, they're all under pressure right now. Some profit taking, despite of the fact that we've heard, mixed commentary, very hawkish commentary from global central bankers, not only in Europe, but Asia, as well as here in the States. But the market right now is not buying into it. There seems to be some profit taking. But where you're not seeing the most notable profit taking, or at least weakness, is in the Russell 2000. And this is a little bit of a positive tone here. Why I'm saying that is just because this is very sensitive to domestically centric economic data, growth factors, and just all in all, looking at small businesses. Now, as I had mentioned, take a look at the banks, especially the regional banks. I've been mentioning this. They were strong today. That's because interest rates have been popping to the upside, bond prices coming down. That's going to benefit banks, and those banks constitute a large portion of the Russell 2000. It's also going to mean that businesses, hey, they're not going to feel the pressure of loans and so forth. Even though interest rates are moving up, they could anticipate that people are going to be spending some more money. Now, we did have some mixed messages because the consumer was under pressure today, if you take a look at XLY. But again, with the banks moving, we'll watch this one very closely. Also, keeping an eye on the metal markets, I want to take a look at gold. Gold pulled off. It's now really just stuck in a grind. I think that gold has basically got to hold this 1245 level if they're going to have any opportunity to challenge the upside. Right now, it's going to be stuck in this range, basically between 1240 and 1250. Until we can break one of those two levels, consider it just a grind right now, which we've been recently seeing. Copper, though, continues to move to the upside. This has been impressive. This gives the industrials and the materials, even though they're weak today, a glint of hope, especially with some of the data that's coming out in the forecast that keep coming out of China. This is a positive. Where we didn't see a positive mode is in bond prices. TLT, which is the ETF that tracks the bonds, people have been selling bonds now. Makes sense. You've been hearing a lot of rhetoric coming out of central banks, the Fed. Whether or not this is going to continue, we'll see. But bonds did able to pull out a little bit of a better close today than where they were originally opened. But they're in a battleground right now. This is where you're going to see if bond prices are going to hold up, or in other words, yields are going to stop going to the upside. This is where they're going to have to make a stand. The 2-year, the 10-year, and the 30-year were all down, and the 30-year led the way down in price, again, in between the 20 and 50-day moving average. And as a matter of fact, if you take a look at the 10-year yield, and as I have always mentioned, this is where I look at it, it popped today pretty nicely, up it was up almost 2% at 2.26%. That's the highest level that we've seen in weeks. As a matter of fact, we haven't seen it this high basically since middle of May. So we're starting to see yields pop. That has been the catalyst for currently right now the financials, which have been the leader, which have been holding up a lot of these markets. But we'll see if that still catalyzes, and we'll keep an eye on that. Now, finance did come off of their best levels today, but did finish well above their 20 and 50-day moving average. And you can clearly see that it's breaking out of this grind that we've had over the last basically 3 months, since basically March of this year. You haven't seen the XLF, which is the ETF, at these levels. So that is a positive for finance. That would be a positive for small caps and the market in general if this holds and continues to lead, especially if bonds continue to unwind on prices. That money's going to have to go to work somewhere, folks. And this could be an area where it will. All right, folks, that's it for the closing bell. Join me tomorrow morning, the final trading day of June. it's going to be potentially a pretty wild ride since it is going into a holiday weekend. Volume could drop off, and any headlines or anything like that could have a magnified move. So we're going to have to be on our toes and paying attention. So I'll see you tomorrow morning for all the shows that we have here at MarketStream.live. See you then.